Levi, Strauss & Co. first went public in 1971, but was then taken private again in 1985. It now returns to the public markets for its second initial public offering. The company were hoping to raise in the region of $623 million, selling over 36 million shares at $17 apiece. This was more than Levi's had originally expected leading up to the IPO, with an intended price of between $14 to $16. That number climbed to $22.22 before it became available to the public. At the end of the day, it was $22.41, putting the company's value at $8.7 billion. The proceeds will be split between the company and selling shareholders, with Levi selling around 9.5 million shares. There were 12 underwriters on the deal, led by Goldman Sachs. Levi's planned to use the proceeds for general corporate purposes, including operating expenses, although they have said that they could use some of the money for acquisitions and strategic investments. The IPO will also give the Haas family, descendants of the brand's founder Levi Strauss, the chance to cash out some of their stake in the company. The company began in 1853 in San Francisco as a dry goods business, inventing the famous blue jean 20 years later. As well as jeans, they also sell shirts, dresses, shoes and accessories. They also own the Dockers brand, which the company state helped to drive the 1990s trend towards casual Fridays, as well as Signature by Levi Strauss & Co. and Denizen brands, which are its more affordable options. Levi's will be going public in a general retail environment that can best be described as struggling. Uncertainty about US-China trade tariffs, changing shopping habits, including the rise of e-commerce, as well as ongoing bankruptcies and store closures are all affecting the industry. 16 major US retailers filed for bankruptcy or announced liquidations in 2018, including Nine West, Toys R Us, Brookstone and Mattress Firm, with the trend looking set to continue into 2019. Payless Shoe Store, for example, may be about to close down all of its near 2,100 stores across the US, according to the Wall Street Journal. Levi's IPO prospectus draws light to its iconic status and effortless cool, which it hopes will be working in its favour. It has also increased its marketing efforts over the last 2 years, becoming a fixture at sporting events and music festivals, teaming up with stars such as Beyoncé and Justin Timberlake. The company has, of course, not been without its problems, notably dropping its auditor, KPMG, in 2007 after significant accounting errors. Its pension plan was also reportedly underfunded by $178 million as at the end of 2018. The company also views climate change as a real threat, with many of the governments in countries that they do business in passing new regulations to deal with this. Levi's and its business partners will need to comply with any new regulations, and that could hurt the core business. The company has stated, as a result, we may experience increases in energy, production, transportation and raw material costs, capital expenditures, or insurance premiums and deductibles. Inconsistency of legislation and regulations among jurisdictions may also affect the cost of compliance with such laws and regulations.